All right, everyone, welcome back to another live episode in the flesh of Masari's Unqualified Opinions. I'm Ryan Selkis at 2-Bit Idiot. I have a very special guest today that I try to emulate with these interviews. I'm talking about Joe Wiesenthal, who's an editor at Bloomberg and anchor on Bloomberg TV. I've had the privilege of going on and prognosticating a couple times on Joe's program, What Did You Miss? And we're going to talk about quite a number of topics today, mostly around how mainstream media narratives are formed, about Joe's personal trip down the rabbit hole. I happen to find him maybe the most informed, if occasionally trollish, MSM personality when it comes to Bitcoin and crypto. He's spoken at the Coin Center's annual gala, which is obviously an insiders focused event, and generally I'd say has a finger on the rational pulse of the industry, even if he's not a religious zealot like we ultimately want to convert him to be. Joe, thanks for joining us. And why don't we start just by getting a little bit of your background, at least the Cliff Notes, and with an emphasis on the origin story for how you first started to go down the Bitcoin crypto rabbit hole.
Yeah, absolutely. So, I mean, the short version is that I basically started covering financial markets as a journalist in about late 2008, which was a really good time. I had been doing some other reporting and other media stuff, and I'd always been interested in markets prior to then. But in terms of like seriously covering markets as a full-time thing, it was like really late 2008, October 2008 specifically. And of course, that was just like the best time ever to start because there was just so much going on. So I got my career started right at the cusp of the great financial crisis, and that really dominated what I covered for several years, and of course has informed everything since then.
And you're not being facetious, because from a media perspective, it was.
Oh no, I wasn't. I would not be facetious at all.
Yeah.
It was just there was so many interesting, important things to cover, and it was the center focus of all news. So I really mean that it was a very fortunate time to start there because it was huge and it was the center of everything.
Yep.
And you know, it's funny, like people always like ask me, they say like, what do you cover? I say markets. And they say, well, what does that mean? And I say, well, a market is just anything that goes up or down on a chart. Like if it goes up or down on a chart, I probably am interested in it. And you know, nothing has moved up or down on a chart over the last 10 years the way Bitcoin has, or the way cryptocurrencies have. Like you can't, like if you're not interested in it on some level, as a person who's interested in markets and what forms of price and where prices come from, like there's something wrong with you. Like, okay, I get it. Like it's even if you just want to say like I'm interested in this purely because it's the ultimate emblem of irrational bubbles. Even if that's like your view, like that's interesting. I don't think it's entirely irrational, just like 99% irrational. But even that is like a key thing. So I like it first came on my radar probably around when other people did, like 2011 or something like that. You start reading stories about this weird thing that was up like 10,000% and why, and like I think I had the same. And I definitely had the same initial impulse as everyone is like, okay, this is weird. This is silly. This is a bubble. And at that point, it was probably like $5, just something like that. Yeah, it's like, that's crazy. Yep. It went from less than a penny to $5. That's obviously insane. And so that's kind of like the first stage of, interest that a lot of people have. And then maybe they move on. And then the second phase of interest is probably not quite dismissing it, but trying to learn a little bit more and then dismissing it.
Yeah.
And so you're like, well, okay, this isn't gonna work. This is slower than traditional payments. Okay, so it's not gonna work for that. Or there has all kinds of technical reasons why it can't be a serious currency. Okay, like dismiss that. So, and then I think like eventually it like sticks around long enough, and I think this is a really important lesson for all journalists and, again, anyone who's interested in markets, which is that things may be irrational and they may be bubble and they may be overvalued, but you should at least be open to the possibility that they're not. And you should at least make an effort to understand why people who are buying at X price, what their thinking is. Maybe it's completely insane. It's like maybe it's like Beanie Babies in the 90s in which it's just, there's really like, the justifications are completely absurd.
Yep.
But I do think everyone, or even if it's just stocks, it's like, oh, why are stocks up so much over the last 10 years? And so many people are very quick to call that a bubble. But I think everyone whose impulse is initially to say that at least owes it to themselves sort of intellectually to like do the work to figure out at least what the other people on the other side of the trade are like genuinely thinking.
I always think that doing the work is a prereq to getting that phase out of the way, right?
Yeah.
So it's almost like you need to do at least the intellectual work, if not invest, to actually see the cycle play out.
Yeah.
You need to have one dismissive cycle, right?
Right.
And then if you have a couple of those cycles where you're paying attention, at some point you're just looking at it and you're saying, why hasn't this thing died yet?
Yeah, and it's weird. I agree. And it's kind of weird how many people are still just like absolutely convinced that like Bitcoin is going to die. And I get it's possible, but at some point it's like, okay, it runs up to like 200 and then down, and then it runs up to 1,000 down, and then it runs up to whatever, then it runs up to 19,000 and then down. But it hasn't died. And at some point, it's surprising that anyone does not feel a little bit compelled to dig deeper. And still how many people are just convinced that, well, yeah, but it's still just a matter of time.
And Bitcoin has obviously benefited from all these different macro trends.
Right.
Like the prophetic Genesis blog post,
Right.
Chancellor on the brink of the bank bailouts, and all of those trends continue to move in the direction that ostensibly should be good for Bitcoin.
Yeah.
So let's talk about some of your coverage,
Sure.
And evolving coverage personally of the asset, because you're covering markets in general. You've got a pretty broad network within the crypto space right now. One of the other non-crypto elements that is, I would argue, one of the primary drivers at a macro level for at least Bitcoin for the foreseeable future is this concept of MMT.
Yeah.
So let's talk about modern monetary theory and the resurgence it's having in kind of mainstream circles when it used to be this very niche idea, and you've written about it quite a bit.
Yeah, well, let's get to the question of whether it actually makes sense as a driver for Bitcoin.
First, what is it? Yeah.
Yeah, so I mean, I first started becoming aware of modern monetary theory very soon after the crisis, 2010, 2011, probably 2010. And, the U.S. deficits were absolutely skyrocketing then, right? Like $1 trillion deficits. Revenues from taxes were collapsing because the economy was collapsing. And, spending increased due to various stimulus and stuff like that. And, of course, we had QE and all this, Fed stuff. And I started feeling kind of dissatisfied with the mainstream explanations for what was happening in financial markets, particularly on the interest rate side. Because my assumption, like many other people, had been like, well, look, if the economy is collapsing and the deficit is soaring and tax revenues are tumbling, interest rates should go higher. Or there should be some sort of, all this debt is being sold into the market, and instead the exact opposite seemed to be happening. Now, there are a lot of, you don't need to go to heterodox or unorthodox schools of thought to explain that. Sort of like mainstream eco more or less can explain that, okay, well, in a depression, there's a flight to safe assets. People want to buy something where they feel that the borrower is going to be good for it, and governments tend to be pretty good for it, at least if they control the printing press. Nonetheless, I did start to feel this sort of dissatisfaction with the sort of mainstream media, macro discussion of deficits and debt. It just did not feel like it was aligning with what I was seeing. And I started getting frustrated by that. And modern monetary theory, which I really started taking off, and get to Bitcoin, I do think that there is sort of a similar origin story of the trajectory. This sort of seeking of a post-crisis new ideas, and in a crisis, and when elites and mainstream institutions lose credibility, people look for new ideas, and there's become suddenly kind of a clearing in the woods, and people can go in new directions. And I think that's what I got interested in this, because it felt like more than the people I was listening to among mainstream economists, the news I was watching, was offering a more compelling explanation. And the idea, essentially, and I don't even think it's really that controversial, is that to some extent, when a government issues debt and pays for things in a currency which it creates, it doesn't have credit risk. So credit risk is, I lend money to you and I'm going to base the interest rate on, what your income is, what your assets are, and what I think about your prospects to pay. And of course, I also want to, if inflation is high, then that'll increase the interest rate. With the government, there's really no reason to have a credit risk element of it, specific for the U.S. government or countries like UK and Japan. The main thing I want to be concerned about is inflation risk, but the credit risk is gone. So then, I think that thinking about it that way, that a government bond in a sort of developed country that issues its own currency should only really have more or less inflation risk and not credit risk, was like one of the first sort of key insights that the MMT people most clearly articulated. But then I think don't need to talk too much further along, but there are other ideas within that sort of sphere that I think have proven to be extremely useful. So MMTers tend to really think that fiscal policy, government spending is a much more robust way to approach a downturn and to generate inflation, if you wanted to, than relying on central bank easing and rate cuts. That I think is proven pretty clearly. We've had extremely mediocre recovery over the last 10 years. Everyone in basically any school of thought is disappointed with the pace of recovery. We've leaned almost entirely on central banks to do the job by cutting rates. QE, negative rates, all kinds of experiments in Japan where they buy ETFs. It doesn't do anything. That's the crazy thing. People put up these charts of government balance sheets surging and the Fed now owns $4 trillion of whatever, and the Bank of Japan owns this. It doesn't do anything. That's the crazy part is that for as eye-opening as all these things have been, the effect is very little. Currencies have not gotten wildly debased. Inflation hasn't taken off. And so again, I think right. There's always yet, but I think that by and large, the sort of failure of what seemed kind of would be obvious. You're government's creating $4 trillion worth of reserves. That's got to do something. That's the kind of phenomenon that leads to, that I think has opened the door to other ways of thinking about how the economy works.
Have you tracked these more or less along the same time period then? Because MMT started to pick up steam in 2010, 2011.
It's really
Bitcoin. They've kind of, it's almost like they've both gone in the same cycles.
Yeah, they really have. And there's something that I only realized literally just thinking about this question, because I've seen people on Twitter that posit that there is this sort of inherent tension between MMT and Bitcoin. I don't really buy it at all, because you could certainly believe that modern monetary theory offers a better framework for understanding government finances and the domestic economy than mainstream models or any other unorthodox model. And you could simultaneously believe that there is a lot of appetite for a decentralized currency that's censorship-free, seizure-free, and so on. So I don't really see the tension that other people claim there is. But I will say one thing that I really think is similar about these two things, and one is a form of money and one is a school of thought. So they're hard to even compare because they're so different. But one thing that I think is actually similar and I think is interesting that I haven't seen anyone else talk about is that both are fueled by, I would say, two groups of people. One is the sort of technical academic side, and the other is sort of evangelists. So you look at Bitcoin, and there are obviously people who do extremely technical work. They're working on the protocol. They're working on things like Lightning. They're working on wallets and so forth. And they're it's hard computer science. It's interesting computer science. And then you have the sort of evangelists who are on Twitter who say the same thing over and over again and show it to their friends and so forth. And that's fine, but it's like both sides are kind of necessary, right? Like the shills wouldn't have anything to show, and I say that as a term of endearment, but whatever. The believers wouldn't have anything to promote if it weren't for the people doing the hard work, and all that hard work on the sort of computer science side wouldn't really go anywhere if it didn't have the people like sort of spreading the gospel. And I think
the U.S. dollar has the U.S. military.
Right,
Bitcoin has people that are mean to you on the internet.
Yeah, exactly. And I think if you look at modern monetary theory, there's actually, and this is one thing that I think separates it from other schools of thought, which is that you have people in, academic departments around the world, like doing like serious work on all this stuff. And then there is also this sort of like activist wing of the MMTers and people who like are not academic economists, but who like really want to inject this message into the debate. And the message they want to inject is that the way we've been thinking about government finances is completely wrong. The language that we use to describe government finances has artificially created, has led us to bad decisions that we didn't need to make, trade-offs that we didn't need to make, premature austerity that didn't need to happen, and so forth. And that's really been important because I think that the MMT project is not satisfied with just writing obscure articles in academic journals that nobody wants to read. It wants to like change the debate, and you don't see that with other schools of thought, neoclassical economics or new Keynesian economics, which is kind of like what most central bankers and stuff are. There is not some like ground game of like true believers in like the sort of view of economics that someone like Ben Bernanke had, which is who was like pumping like pro Bernanke, pro QE memes on Twitter. There are actually a few now because things are getting so weird. But by and large, that sort of bifurcation between the academic work and the ideological work is sort of distinct with MMT and kind of also paralleled in where we've seen Bitcoin come from, I would say. So there is this sort of weird parallel about how these two things post-crisis in the space where people were seeking something new, questioning what they had been told, both of them have sort of emerged as these major phenomena.
Do you cover anything else personally? Right? So it seems that Bitcoin, maybe because it's followed this parallel path to MMT and kind of macro narratives, because it's the biggest, because you can very easily label it like digital gold or whatever, peer-to-peer currency. It's relatively simple and it fits into broader markets narratives that you're going to cover on a day-to-day basis, which is important because the rest of the industry is so niche, right?
Right.
Ethereum is a $15 billion market cap company. That's like a small to mid cap stock that's moving on a day-to-day basis. Yet you have to balance because you have the experience with Bitcoin where you know that this could explode.
Right.
How do you spend your time studying everything else? Can you afford to just kind of wait and get knowledgeable like once there is a spike?
It's a mix. I mean, because like obviously crypto overall is still like a relatively narrow slice of what I have the capacity to cover. It's sort of like I kind of have to wait and see, all right, is this becoming a real thing? I've spent I feel, probably anyone who says like they totally get any of this stuff is kind of lying. I feel like I have a pretty good handle on Bitcoin's role in the ecosystem, what the project is therefore, fortunately, like I know people who are a lot smarter than me, and I'm like, what the heck is going on with, Taproot or Schnorr? And I like had that explained to me like 10 times. I always forget what it is, or like, it's like some new like multi-sig transactions or whatever. And I like try to like do the same when I hear about like Ethereum, or I know people are getting excited about DeFi and Ethereum-backed stable coins, and so I have people like, what's going on with this? And then like my ability to actually like dive in on things like really starts to trail off after that. But there's like enough like anonymous trolls who like DM with me that if I see some like weird like scandal breaking out in the crypto world that I don't understand, that I could say like find someone real quickly to fill me in. But most of that is not even for my reporting, just for my own curiosity. And
I think there is a general impression that the media will only cover crypto if there's a massive spike, a massive dump, or some type of scandal or salacious headline.
Yeah.
Is that fair? Or does it just seem like that? How do you think about covering this asset class? Because in my eyes, the positives are slow and steady. Yeah. The negatives are sharp. Right? Yeah,
it's really complicated for a few reasons. Mm-hmm. And one of the things is that, there are so many what I would call either like outright scammers or polite scammers or de facto scammers in the space. So like, obviously there's tons of like Ponzi schemes and exit scams and stuff where it's like pure theft, right? So we know all that. But then there is also a lot of like de facto scams, by which I mean people promoting some aspect of cryptocurrency because it sounds cool and the idea is really bad, but they want it to sound cool. And the problem is, from the media perspective, is that there aren't that many people who just like have the intimate familiarity. There are all kinds of weird things. Like there are a lot of people in the media who are still, because it's so new and different, don't have the familiarity to like sniff out like, well, what's real, what is actually substantial, what's just vaporware, what's just someone who's trying to sound cool. So that is like a big asymmetry. Another really big one is that because of like, maybe it's like the weird like sort of like cult-like aspect of it. I mean, even when you introduced me, you're like, you tried like flip one day, hope like I fully flip over. And that is like a real thing. You hear it. It's like Wall Streeters like, oh, I've gone like to crypto, whatever it is. There are not that many people in the world that I've come across who are both really into covering the space and really know about it who haven't flipped. It's like, if you're like someone who's interested in it, then it's like everyone like kind of like flips over into that world. And so you like kind of have this weird like evaporative cooling effect where the people who are interested in it or get assigned to cover it, it takes them a while to become familiar with it. And, it doesn't like fit neatly into any existing asset classes. It's like digital gold is a reasonable analogy, but obviously it's not airtight because there are all kinds of differences, and it's not really a commodity. Gold can get turned into jewelry. Bitcoin doesn't get turned into anything else. So it's decent, but it's not a great analogy. I don't think it's not just a commodity. It's kind of a currency too. I happen to think that it's also kind of like maybe it should be covered by real estate people, but
it's the platypus.
So it's like
Spencer
hard
from Blockchain Capital.
So there are just all kinds of like challenges, and I think they'll get better over time. And I think like the mainstream media's coverage of it has gotten a lot better over time, and it'll continue to do so. But to your initial question, it's probably the fastest periods of like new learning will be during the sharp run-ups and sharp run-downs, because that's what draws people in. Like I said at the beginning, markets is what goes up and down. Markets is a line that goes up and down, and when things aren't moving, then I think interest stagnates, and then when things move fast in one direction, suddenly people learn more. So it's just a process.
So your flip price is what, like 40,000, 50,000 when you flip, over to CoinDesk as like lead anchor?
Yeah, right, something like that. That's somewhere. The bid is where still
we're out of the money still.
Yeah, exactly right.
Let's talk about how the narrative actually gets shaped. Right? Because I've had some conversations, because I've been on both sides of the table. Right? I'm an analyst independently. I'm not nearly as deep as I was when I was doing this just full time day to day in like 2013, 2014. And the industry's just gotten so much bigger.
Right,
so it's, even for me, it's impossible to keep up. And this is our whole company. Right. At Messari, our whole focus. I've run CoinDesk as well, so I know that you can get attacked from all sides if you don't get something perfectly right and capture all the nuance. And the argument that I've made for most people that will complain about coverage of a specific asset, a specific project, is basically boils down to two things. One, if I don't understand it or we don't understand it, it's your fault.
Right.
I'm sorry. And two, directionally, you should be looking for insights.
Yes.
Not for precision, but for directionally accurate coverage, because
Right.
you are never going to, as like a third party narrator, have like the omniscience of like a storyteller, like you'd read in a novel. Like there is no such thing as the omniscient narrator
Right.
when you're talking about journalism. But if they can get 50% or 75% of the way there, you look for signal in the general narratives and trends versus the specific pieces. Is that the right way to think about it, or how do you describe the media narrative cycles that take place typically around booms or scandals?
It's a good question. I mean, one thing that I think it's important to really defend on the media side, which is that, it's hard to criticize journalists too much for, say, like not getting something when there are plenty of examples of believers not getting something, even with respect to crypto. And I think a good example, I think it was like 2013, Mark Andreessen wrote a op-ed in DealBook about Bitcoin. It was totally wrong. I mean, it was all about how it was going to be like this PayPal 2.0, and it was going to like be lower fees than, and this was like lower fees than Visa. And now no one, at least in the BTC world, actually seriously like makes the case that the selling point of Bitcoin is that it's going to be like this low fee alternative to Visa. The people who still believe that have like gone and joined their own calls. But on the BTC side, so like, how can anyone really like criticize a journalist for like, quote, not getting it, when here was someone who's like literally one of the foremost public early advocates of Bitcoin.
And not just that, but had been there in the early days of the internet when they made the decision.
Yeah, so many reasons. And here was, and it's fine, like people get things wrong, but it's like you're really getting like, here's someone who's like one of the preeminent advocates of it and knows more about like the fundamental mechanisms of the internet, and essentially like described this whole vision that turned out to not be at all where it was going. So if you have like people who are like core movers and shakers of the space, sort of like, and we could go through like all kinds of prognostications, visions for what it was going to do, the different meme cycles of Ethereum, of Bitcoin that didn't turn out to be right. So, hard to like fault journalists too much when even the people on the inside often don't know where it's going. But I think like there are still within the media, I think like there's still like cycles of like learning more about different aspects. I think after 2017, a lot of the interest was about the degree to which institutional investors, once it became a thing of substantial size, how they would invest in it. What are the tools set up that allow them to? What are the roadblocks to? Those are areas that I think people in the space were interested, that the media quickly identified as important questions. And again, like you said, it's like not everything is 100%, but directionally, that was an area in which a lot of the coverage, more or less, I thought, tracked a lot of the interest from the people in the space.
Bloomberg, out of financial media, I'd argue, has the best brand for that niche of coverage. And you kind of have to, or at least you should, because of the Bloomberg terminal and, as a platform that is the engine of the business. Yet, because this asset class is so volatile, it feels often not just you as a company, but all financial media is almost always a lagging indicator, right?
Sure.
So like crypto will get covered in the peak of 2013, it'll get covered in the peak of 2017, and then all of a sudden it'll fall off the cliff, right? It's kind of like, it's almost like a running joke. And perhaps it's not fair because most other industries, if you see something that's growing exponentially, it's not going through these massive peaks and valleys, at least from a market standpoint. When you think about like venture funded companies, it's generally like stepwise functions up. This really does feel unique. So how do you help people derive signal from all the noise, knowing that you're probably covering the news at either its best or its worst, and maybe overstating one direction or the other, and maybe it's even priced in?
Yeah, I mean, I think it's not quite as bad as you make it sound with media being a lagging indicator. I mean, I was just thinking the other day, I think like...
we'll give you a counterexample.
Well, I mean, just, I think...
And I don't mean that as a criticism, but it seems like a natural
of course. Well, people
order of
look,
business.
news has to happen first, and then people write about the news. But, I was thinking and I think Bloomberg has had, I think we've had Bitcoin prices on the terminal since at least 2012. Someone could have said in 2012, oh, Bloomberg just added Bitcoin to the terminal. That's got to be the top, right? That would have been, I'm sure people probably even thought that or said that at the time. It's oh, they just dove in. And then, of course, went crazy over the next 5 years. So it's not entirely lagging in that respect. Of course, no one in the mainstream was thinking about it in, day one. But there are other things. I mean, late 2017 was instructive because, there was a lot more coverage of Bitcoin and media overall, and especially in the second half of that year. But, I think there was also a lot of coverage of the fact that there were a bunch of coins flying to the moon at that time that had nothing, that had no real use, no prospect for use, could not possibly live up to the claims that the developers had done. And I think there was quite a bit of coverage there. So I think you think about signal from the noise, nobody knows whether tomorrow or the next year or next week or whatever it's going to go up or down. Certainly, I don't think that's most journalists don't view that as their job. But sort of being able to help a reader distinguish between how something like Bitcoin is completely different from something like Ripple, is completely different from something like X, is totally something that journalists are capable of doing in real time and frequently do. So, sure, just from a price standpoint, there is going to be a lag, and prices draw people's interest. It also draws investor interest. I mean, it's not just, I'm sure, at the same time in late 2017, when the mainstream media started doing way more crypto stories, I'm sure actual people with money, there's probably a one-to-one relationship between the price, the number of stories, and then investors should I be getting into this? Should I be doing an allocation? So everything is kind of correlated
marketing,
in that
right?
respect.
You need 10 impressions before you make a purchase decision. So, and it goes back to that concept of how many cycles have you paid attention and ignored it, right?
But there's plenty for journalists to do to add value to really what is this project?
Yep.
What is the difference between X and Y? And so if something comes along and it's we're just like Bitcoin, but faster transactions and lower fees, journalists are completely capable of tackling something like that. And it's really important. And I think it's important for any investors or prospective investors or people who are just interested in the space for good reporting on what all this stuff means, because otherwise someone logs into their Coinbase and well, Bitcoin's at 10,000 and Bitcoin Cash is at whatever 500, so it's cheaper and it's more fees or lower fees. That's an area in which I think explaining what this is all about, journalists are totally capable of.
What is your take on Libra and all these central bank digital currencies? Because it seems to me that this is going to be maybe the bigger area of coverage for the foreseeable future when it comes to a mainstream media narrative standpoint.
Sure.
Because a government the size of China or the U.S. that's thinking about digitizing their currency is a bigger story than a $100 billion asset that's not really governed, and you can't speak to the development quite as clearly.
I mean, I think so. Let's start with Libra. My best analogy that I've come up with to describe Libra is essentially Android, which the operating system that Google developed, which is how do you have this, how can you create a operating system that anyone can use, any device maker can use in phones, TVs, cars, whatever, that an open source operating system designed to be very multi-platform like that haven't really existed prior to Android. What I think Libra is attempting to do, and the reason I call it an analogy is see the analogy is, there's all these different payment vehicles around the world. So it's here in the US, we might use Square or Venmo or PayPal or whatever. In China, they may use Alipay or something like that. There's M-Pesa is a popular platform in parts of Africa and so forth. And they don't speak to each other. Like I can't, if you're on Alipay and I'm using Venmo, we're not going to be able to transact. They don't speak to each other. There's no real prospect of them speaking to each other because there are different banking systems and different regulatory systems overall. And that creates an issue with like all kinds of transactions. So what I see is like sort of the goal with Libra is, well, how can we create a universal platform essentially to bypass the inherent restrictions placed in payment systems with each country? And the problem is, and why I guess I'm like probably pretty skeptical of it in the end, is like these restrictions exist for regulatory reasons related to banking laws in all these different countries. And the only way Libra would really work is if regulators all around the world suddenly decided that they were going to relax their rules simply because a company called Facebook came along and wanted to do payments on the blockchain or something that resembled a blockchain. I don't really see that happening. I don't see why. And essentially, it would be like regulatory arbitrage.
Yep.
Like here, we're creating something, and we're like, oh, we're going to call it crypto, or we're going to like talk about some new blockchain technology and give a spiel about remittances and financial inclusion. And so please, like, let us just do payments that you haven't really allowed anyone else to do in a cross-border way. I don't really see it working out.
So in that analogy, China's digital currency would be iOS?
Yeah, exactly. Something like that. And the US is Windows or whatever. But no, I don't know. But no, I think
Bearish.
like with these, no, I didn't mean it
Fed
like
coin.
that. But I think so there's a couple of different questions with these central bank digital currency questions is, I get why they're talking about it. It's not clear to me if the people within central banks around the world who are talking about or promoting it have a clear idea in their own head why. Like what they're seeking to accomplish. I haven't really...
Well, negative interest rates.
No, but it's actually like, it's...
Ubiquitous surveillance.
A cryptocurrency, ubiquitous surveillance might be a plausible explanation for China's goal.
Or just
which they have already.
its reserve currency reach as part of the Belt and Road Initiative. There's many geopolitical.
But they can do that already with banks exist and it's for the most part. The question is like what I think of a central bank digital currency. How does that different from other money, which is already more or less digital? The only real answer, the way it can be different, is if I can have a digital dollar that acts as cash as a bearer asset. And so, if I could pay you via Venmo or Square right now, and that's digital, that's a digital dollar. The difference is that if I have $100 in my Venmo account, what I really just have is a $100 Venmo liability, and I expect them to pay me. And if I want to make a payment to you or something like that, Venmo is going to know about it, and your bank will know about it. But if I had a bearer asset of digital dollars, then I could make a payment to you in theory, and there's no third party that says no or you can't do this. It's like people on Venmo get they get banned because they made a joke about buying drugs, or maybe not a joke, or I heard a story. I think someone paid their friend for they split Cuban food for lunch, and the algorithm thought that they were making a payment to someone in Cuba, and they got kicked off the platform. It's pretty messed up. And if there were a digital dollar, then I could just pay you for Cuban food for lunch, and there's no one who's going to flag it. And so I think the only real difference between a digital dollar and a sort of online dollar is that question of whether it's a true bearer asset that person A can transfer to person B without person C knowing. But I don't really know if governments want that. It's not obvious to me. Hopefully there would be some enlightened governments that say, monetary privacy is a value. We have it with physical cash right now. The world is going in a digital direction. We should allow, at least on some level, people to preserve the right to at least small to medium-sized transactions that they conduct privately without anyone knowing. Therefore, we need to create some sort of digital dollar. I don't think anyone's really saying that right now. And so, other than that, it's not obvious to me what the point is. And you mentioned negative interest rates. I think that'd be worse from a rate perspective, because right now, let's say they really did do dramatically negative interest rates, which for what it's worth, I don't foresee in the US, but let's say they did it. So the easiest way to counteract that just like pull out a bunch of cash, right? But then you have like the risk of storing cash and you put it under your mattress, but maybe there's a fire and it's gone. It'd be easier to pull cash out of the banking system and not have that sort of like degradation with the digital currency, because then it's like, well, it's no longer a liability of a bank, can't pass it on, it becomes like cash. So I'm interested in where all this conversation around central bank digital currencies go. I'm just not clear if the central bankers themselves who talk about it have a clear reason why. But I will say this, which is that one of the most dominant forces in the world, I think, in the business world and finance and economics and technology world, is to just sound interesting on a panel somewhere. And seriously, so like if you're like a guy working at whatever, the ECB or the Swiss National Bank, toiling away at something, like coming up with some paper about a digital euro or a digital franc is probably a pretty fast route to get some attention.
Yep.
And I genuinely, without any irony or humor or sarcasm, think that that's probably a pretty big motivating factor. Everyone wants to sound interesting, and that's a pretty good way to do it.
It's an interesting theory. I have two related, but maybe we'll transition focus. Two more threads that I want to pull on.
Sure.
The first is we've been more or less in a straight shot up for 12 years in the market.
Yeah.
We've not seen something like 2008 or 2001 for an entire generation of media personalities.
Yeah.
And maybe we'll kind of touch on the coronavirus a little bit, because it's happening so much faster, and it ties back to the same question of how do you foresee staying sober and as a voice of reason if things go haywire, or realistically when things go haywire, because that like part of the business cycle is always going to be, there are going to be ebbs and flows. You are going to see other moments like that. It's just a matter of when, not if. And how do you toe the line between creating enough urgency for your audience without having like the Jim Cramer moment, right?
It's difficult.
Or maybe leave that to Jim. I don't know, because it's just a different brand. I'm curious how you see that playing out if it happened this year because of the coronavirus, or it happened in 5 years. At some point, there's going to be this moment where you have to report again on a 2008-like scenario, but you're 12, 15 years, however many years forward in your career. It's going to be viewed, I think, by you and your current colleagues through a very different lens than your lens in 08.
I mean, it's a tough question. I mean, I think that generally speaking, good editors, good journalists, like hopefully they're people of good judgment generally and have an intuitive sense of like, how to talk about something extremely serious without being overly alarmist or theatrical in it. I think you mentioned a lot of people weren't around in 2008, 2009, 2010, but it's not like the last 10 years has been some walk in the park. And I think people forget this. Like, it's kind of been a straight shot up, but how many times were there periods where like, oh, this is it? So it's like, even 2011, 2012.
The U.S. tech downgrade.
And the entire euro area crisis. I mean, the idea that Greece was going to default, people were talking about Ireland defaulting, Italy, Spain. They were like, it was like a really serious thing. It did not seem like an obviously tractable problem at the time. I don't think anyone really knew. And so people thought that was going to be a big deal. When is it? Late 2015, there was a pretty serious concern about possible recession. China had devalued its currency overnight, suddenly out of nowhere by 2%. We got this very intense market sell-off. That was pretty notable and rocky, and some people think that the U.S. should have technically been declared into a light recession in early 2016 due to the downturn in oil prices leading to hitting other manufacturing. So, it has been 10 years of a bull market, but it's not like, it's been all, flowers and roses. Since then. And if anything, there is the flip side, which is not that people are, people say like, oh, no one remembers the crisis, or people have like sort of like people are just used to everything going up. I would make the argument that scars and memories of the crisis run extremely deep, and the impulse to declare that the next 2008 is here is something that a lot of people maybe over-inclined to do. There are a lot of people that remember both the tech bubble and 2008, and so they're always looking for the next one, and maybe too much even. I think we've forgotten, or a lot of people have forgotten, not that there aren't crises, but that there are recessions that aren't crises. And so the question is, even in the framing of your question, it's like, yeah, at some point there will be another 2008, but maybe we'll have another 1991, which is we had a recession, and it lasted a while, and then we came back, but there was no crisis, and there was no fear of a banking collapse and stuff like that. If anything, maybe that's what people have forgotten, that you can have downturns
without it being apocalyptic.
Right.
We'll do a lightning round for this one. I'll try to get you into a little bit of trouble. So one way that I've personally learned in crypto is via my pseudonym, the 2-Bit Idiot. It was an accident of history, reliant on Cunningham's law, right? The fastest way to learn something isn't to ask a question, it's to be wrong on the internet. Right. Do you troll crypto people with some of your tweets?
Yeah, probably. I mean, I guess if I'm being honest, probably. I mean, I try to do it, Socratically, in the sense that I don't, so yesterday, I don't know what day this will come out, but yesterday, I think it was yesterday or 2 days ago, Bitcoin had a big drop, and someone DM'd me and they're like, "Oh, tweet out the Bitcoin plunge," and I was like, "No, I'm not just trying to be obnoxious for the sake of being obnoxious. I'm not I don't want to just I don't need to be the person that points out everyone notices it, but I hope to with being online and fighting people a little bit, always hopefully in a good-natured way, arrive at some sort of further." View, and I like to stress test people's views, and so hopefully if people think I'm trolling them, I try to look more positively. It's all right, you believe this thing, but it's really not working out. It's it's a really good year for Bitcoin so far. Everyone's getting excited about the halving in May, but it's okay, so then why is Ethereum up even more, and Litecoin's up even more, and all these other pointless coins are up even more than that. And I don't say that to be trolling. I'm saying, well, let's really stress test your view. If you think that there is this thing going on that is contributing to a price move, let's try and tease it apart. And how does it stand up in the face of this evidence or this evidence? And plus, they all troll me, so I gotta go back at it.
What's your early take on the coronavirus? Is this going to be the story of the year? Or are we gonna fizzle out?
I wish I knew. I mean, it's going to be a huge story, because even if I think by this point, and even if it appears at the time that we're talking that we'll get some sort of something more in the United States than the cases that we've had, it seems virtually inevitable. I mean, at this point, basically the CDC has told us as such. Even if it doesn't cause an extreme disruption to day-to-day life, already the effects that we've seen on supply chains around the world is really interesting. Between the trade war last year and this, it's extremely hard for me to envision that the mode of doing business internationally with China is just going to okay, let's turn the factories back on and go back to the old way. It's been such an extreme level of stress and disruption. So outside of, who knows what's going to happen? Maybe.
Yeah,
obviously there's the election, but it's
I'm not asking.
I don't think that we're going. At this point, it does not appear that the coronavirus is going to be short-lived, or be something that we just completely go back to normal from. Hopefully, it's relatively short-lived from a public health crisis standpoint in the U.S., especially if cases gather steam. That could be the kind of thing where okay, maybe there's a few week period, hopefully not longer than that, where it's extreme and then it dies down. But from a sort of fundamental economic standpoint, it's hard to imagine everything just going completely back to normal.
Last question on this on this topic anyway. How do you cover differences between what Trump says and what his lieutenants say.
Yeah.
Right. So this has been a constant theme, I think, throughout his presidency, right?
Yeah.
The contradictions and the constant, media attention and cycles that he's been masterful at generating noise or coverage around. But with a situation that's more serious and that does look like it could have a pretty meaningful economic impact, regardless of how it plays out. How do you make editorial decisions around Trump saying the market's looking really good right now versus his CDC head coming out and saying,
our coverage over the last 2 days is just really straightforward. It's like, there was a really good piece. It said something like, Trump says X, the CDC says Y, and the market has sided with the CDC on this question. And you can just, one of the sort of,
it's opinionated with data.
I don't even, you don't even have to force it. Yeah. And that's, I think, the key. And I think where media gets in trouble.
You don't have to go full Hannity or Rachel Maddow.
Yeah, you don't have to
look at the market.
Try that. There's also like we do reporting at Bloomberg that's not just market centric, but I think the facts are interesting enough.
Yeah.
And the facts is and hopefully good reporters uncover new facts. And, we've done that where you have interesting stories about what's going on inside the White House and tensions there about, there's some in the White House that really want to sound the alarm more about the virus. Others who think that sounding the alarm would be dangerous and damaging to the economy or perhaps Trump's perceived reelection odds. Mm-hmm. Just report it out. And I think that's the sort of lesson from the media and all this. And, I don't think the world needs much more than sort of good facts on it. Of course, people are always going to assume that you're making it up or fake news, but can't do much about that.
Bitcoin 2020. The facts are interesting enough.
Yeah, exactly right. The facts, that's my view. That's the lesson of the last 10 years. You don't have to try to force interesting stories these days because there's a bunch out there.
The world is weird.
The world is weird. It's getting weirder all the time. And, I was you always think you're at peak weird, right?
Yeah.
In the moment. And then 2 years later, it's oh man.
That was so tame.
2020. That's that's going to happen, right? We'll look back at 2020 one day and say, I remember the good old days when it was just the coronavirus and the election and
God,
stuff
I hope
like that.
not.
No, I hope this the virus turns out to be not a recurring feature that affects life forever. But there's all kinds of things. Mm-hmm. We've had even on the virus, this has turned out to be one of the most extreme things. But the two stories in the last 10 years that I think are most similar from a sort of uncertainty standpoint, the oil spill in 2011. No, I think it was 2010, Deepwater Horizon. And the reason it's similar is because you just didn't know, right, where it was going to go. Were they ever going to be able to plug it? That was unclear. And you could imagine Deepwater Horizon happening now in 2020, the number of insane threads you would be reading. It's I'm a retired petroleum engineer, and here's my thread about there's no way this can ever be capped, and then it gets 40,000, get 50,000. It's see. It didn't happen, but it could have, or there were people who thought that.
So and then the other one, maybe things are just as weird, but they're more amplified.
Yeah, it could be. Social media has that effect. And then the other one is the nuclear crisis at the Fukushima Daiichi nuclear plant. It was not clear that they were going to be able to contain that. And I remember suddenly, people if Geiger counters are on Tokyo, is there any radiation? They did eventually, find a way to battle it. But again, imagine what we'd be hearing today on Twitter about that story and the prognostications about this uncontrollable nuclear meltdown that was inevitably going to spread dangerous radioactive material to every city in Asia, and what that would do. It's the coronavirus is very real, obviously, and it's already having massive disruptive effect. But at the same time, you can think of these other examples of these sort of unexpected exogenous events that no government or central banker can control because they're just things out of their control, and they just fight their best to stop them. But the true meaning of uncertainty.
Mm-hmm. Well, Joe, you're great at covering the uncertainty
Thank
and
you.
being sober about it. So I'll look forward to seeing you again on Bloomberg soon or on Twitter.
Yeah.
At The Stalwart. Do you still wake up every day with the famous?
Yeah, because especially now, like I started always tweeting what I miss in the morning during the Euro crisis because so much was happening while I was sleeping.
Yeah.
So now we're back to that with the coronavirus. So many developments happen while I'm sleeping. So it actually makes sense again.
Yeah, I don't wake up at 4:30, but I started aping that. What should I write about today?
Nice. It's great.
And it's great. You get so many responses.
It's interesting interactions that I don't expect. It's great.
Joe, thanks again for coming in, and thank you for tuning in to the most recent episode of Unqualified Opinions with Joe Wiesenthal from Bloomberg. Catch him on Twitter and catch us every Tuesday and Thursday. Subscribe, tell your friends and colleagues, and we'll see you next time. Peace.